Dear students, welcome to lecture of Public Sector Economics. In this lecture, we will discuss the classification of taxes. This lecture is part of the chapter of public revenue. So let us start. The first type of taxes is direct taxes. You know that direct tax is a tax in which the impact and incidence are on same person. Means the person who pays tax, he has to bear the burden as well. The burden of such type of taxes cannot be shifted to other person. In other words, it is the tax whose burden is borne by the same person on whom it is levied. This tax cannot be shifted to other person. The person who is paying tax will have to bear the burden. In Pakistan during 2019, the direct tax revenue was 38% of total tax revenue, according to the Economic Survey of Pakistan 2019-20. Examples of the direct taxes are income tax. You know that income tax is directly deducted from the income of the income of the servants, those who are doing jobs. Income tax is deducted from them. Similarly, there are tax returns. Those who are taxpayers, they submit their income tax returns. So income tax is a tax which cannot be shifted on somebody else. Similarly, corporation tax on companies' profits is another type of tax which can be called direct tax. Similarly, property tax and taxes on individuals and corporations are under this category of taxes. Direct taxes have the benefit of direct taxes are that these are easy to calculate, and the cost of collection of direct tax is comparatively low. But the indirect, the disadvantage of the direct taxes are that these pinches the taxpayer when he pays a lump sum amount on his income. Similarly, this such type of taxes they are prey of the tax evasion. The people they try to evade such type of taxes. So these are the disadvantages of such type of taxes. Another type of tax is the indirect tax. The indirect taxes are those taxes which are paid in the first instance by one person, but they are shifted to somebody else. The person who pays the tax, he doesn't bear the burden. He shifts the burden to somebody else. Means these taxes can be shifted to the other person. The one person paid in the first instance, so the incidence is on the person who pays the tax, and he shifts it to the other person, which is means that the impact is on other person. An indirect tax is that tax which is initially paid by one individual, but the burden of which is passed over to some other individual who ultimately bears it. Such taxes be levied on a variety of goods and services, impact on one person and incidences on the other person. The taxes on the goods and the services are under this category. Examples of the indirect taxes in Pakistan are excise duties, sales tax, custom duties, etc. In Pakistan, the sales tax on goods is almost 17%. In the Sindh, the sales tax on services is 13%. In Punjab, the sales tax on services is 16%. In Balochistan, sales tax on services is 15%, while in the Khyber Pakhtunkhwa province, the sales tax is on services is 15%. These are the indirect taxes. Proportional tax. The next category of tax is the proportional tax. A tax is called proportional when the rate of taxation remains constant as the income of taxpayer increases. In this system, all the incomes are taxed at a single uniform rate, irrespective of whether tax income is high or low. The tax liability increases in absolute terms, and thus the proportion of income tax remains the same. For example, the income tax in Pakistan is a type of proportional tax. The sales tax in Pakistan is income tax is not proportional tax, but it is a progressive tax. The sales tax is a proportional tax because if the income increases, the sales tax remains same for all categories of incomes. Progressive tax. When the tax rate of taxation increases, the taxpayer's income increases. It is called progressive tax. In this system, the rate of tax goes on increasing with every increase in the income. Under the progressive tax system, if the income of consumer increases, the tax rate also increases. Income tax in Pakistan is a progressive type of tax because there are categories of the income. The lower category is taxed at a lower rate, and higher category is taxed at a higher rate. Regressive tax. A regressive tax is one in which the rate of taxation decreases as the taxpayer income increases. Lower income is taxed at a higher rate, where higher income is taxed at a lower rate, and examples are taxes on commodities in Pakistan. A specific tax. The specific tax is levied on a measure, size, and weight of good. For example, the tax on sugar is per 50 kg, it is specific tax. Or if the cloth is taxed per meter, then it is the specific tax. The tolerant tax is another category of tax, and under this category, the tax is levied on the value of a product. Tax on high price cars is comes under this category. Similarly, there are many taxes on earnings around the country. One of such type of tax is payroll tax. Payroll tax is a tax which is levied on the earnings of workers. Payroll tax are the primary means of financing social insurance programs, such as those discussed in the preceding chapters, like the Social Security, unemployment insurance, and Medicare, and so on. These are the aim of the payroll tax is to finance the social insurance programs like Social Security, unemployment insurance, and Medicare, and so on. Taxes on individual income. The second type of taxation on income is the payroll tax is the first type of income, and the second type is taxation on individual income. It is a tax paid by individuals on income accrued during the year. The individual pays such type of a tax over the income they earned in course of 1 year. Income for income tax purposes include labor earnings, but the tax is distinguished from payroll tax by applying to a broader set of income sources, implying in many cases to entire income of the family, not just to income of one individual worker. The payroll tax is a tax which is deducted from the income of a single person, while the income tax is levied on income from all sources. A form of income taxation that is of particular interest is the taxation of capital gains, the earnings from selling capital assets such as stocks, paintings, houses. The capital gains tax is actually earning from selling of capital assets such as stocks, paintings, and houses. Taxes on corporate income. Corporate income tax. Many countries also separately tax the earnings of corporations through corporation income tax. The purpose of separate taxation of corporations above and beyond taxes on individual is to tax the earnings of owners of capital that otherwise might escape taxation by individual-based income tax system. This tax is levied in order to reduce the escape of the owners of the companies. Taxes on wealth. Wealth taxes are taxes paid not on income as it is accrued but on the value of assets held by a person or family, such as land, jewelry, artwork, real estate, and stocks. These taxes are included in the category as state and local property taxes, which are based on the value of land and any structure built on the land, and estate taxes, which are based on bequests, money, property, and so on left behind one dies. The wealth taxes are a category of the wealth taxes or the form of wealth taxes is one of the include the property tax, which is usually collected by the local or state governments. Taxes on consumption. The form of taxation that is mostly common around the world is the consumption tax, which is paid on the individual or household consumption of goods. Consumption taxes are often levied in the form of sales tax, taxes that are paid by the consumer to vendors at the point of the sale. These are the most sales tax is the most common type of tax and in the taxes on consumption because it cannot be avoided. Everybody who purchases a good, who buys a good, he pays the tax because the sales taxes are added to the prices of the goods. These taxes can be applied to a broad variety of consumption goods or to particular good alone. When applied to only certain goods, for example, cigarettes, cars, gasoline, the sales tax is called excise tax. Payroll, income, and wealth taxes are called direct taxes because they are assessed directly on individual. Consumption taxes are called indirect taxes because they tax an individual indirectly by taxing their transactions. If in this picture we have the U.S. tax revenue by the type of taxes, the federal government of the USA collects 2.9% from consumption tax, 41.6% from individual income taxes, 34.8% from social security contribution, and 15.1% from corporate income tax, 5.6% from others. Similarly, under state governments, the states collect 18.5% from property tax. Remember, this tax is not included in the federal government tax. It is a provincial level, the state level tax. The 21.6% from consumption, 41.6% from others, 13.9% from individual income tax, and 4.4% from the corporate tax. If we aggregate the provincial, the state, and the federal government revenue, we can say that the tax income, out of the total tax income, 4.3% is from property tax, 32.5% from individual income tax, 26.7% from social security, 12.6% from corporate income, and 14% from others, and 7.2% from the consumption tax, which is very, very small as compared to the consumption taxes in Pakistan. Here we have a sketch of few other countries, the type of taxes, the contribution of different types of taxes. The property tax 33%, corporation income tax 20.9%, the consumption tax 27%, others 26%, individual income tax 23%, Social Security 22.8%. This is the figures for Norway. In the Denmark, Denmark is considered to be a country with highest individual income tax collection, because the individual income tax is 54.3% in the Denmark, which is very high percentage, while the consumption tax is 30.4 and other are 23.8, and the corporate income tax is 6.7 and the property tax is 3.8%. As compared to the Denmark, compared to Norway, the highest proportion of the individual, the income tax is more than double of the tax which is imposed in Norway. The OECD countries' contribution of taxes can be seen in this diagram. We can see that the individual income tax in the OECD countries is 24.5, the consumption tax is 32.8, social security 26.6, corporate income tax 8.5, property tax 5.5, and others 1.6%. After discussing the international tax revenue by type of tax, let us discuss the taxation system in Pakistan. In Pakistan, we have a variety of direct and indirect taxes. Here in this figure, we have tax revenue as a percentage of GDP. In the fiscal year 2012, we have the out of the total federal revenue, we have 10.2%. The provincial revenue was 0.5%, and the federal revenue seems 9.7%, while in the year 2013 we see that the revenue by the provincial revenue increased, and we see a steady increase in the provincial revenue, which was 0.5% of total federal revenue to 1.4% in the in the year 2020, which may be due to the fiscal decentralization, because in the fiscal decentralization some of the tax in the provincial revenue has increased. This is the fiscal picture of the Pakistan. We see that throughout the years from 2008 to 2020, in this 12-13 years, we see consistent rise and fall in the expenditure. Similarly, we have a fiscal, the revenue side, rise and fall. This blue area, this shows the fiscal deficit, because we see the expenditure. This is expenditure line. This has always remained above the revenue. We have always faced the deficit on the fiscal side from 2008 to 2020. This is a picture of the revenue and expenditure, which shows in Pakistan always the expenditure are greater than the revenue, and there has been a rise and fall in the revenue. We see a fall in the revenue during the 2019-20, and this may be due to the COVID-19, and we see a increase in this year. So the fiscal deficit we see very high, which was very high, and the GDP growth here in this period was minus 0.4%, which was the lowest in the history. The fiscal indicators of Pakistan is the percentage of GDP. This column shows the expenditure total expenditure as a percentage of GDP from in the year 2008 to 2020, the current expenditure, the developmental expenditure, and a strange thing is that we see from 2008 to 2020 a rise and fall in the expenditure, but in the recent years, 2018 to 2020, a big fall in the developmental expenditure. On the revenue side, we see the total revenue in rise and fall fluctuations. At the moment, in 2020, we expect the highest revenue. After total revenue, this column shows the tax revenue, while this shows the non-tax revenue, and we see the non-tax revenue is continuously on fall. Similarly, this is the FBR revenue in the billions, and we see a continuous increase in the tax revenue till 2018, and from 2018 onward we don't see any improvement in the in the revenue collection. This is another figure which shows the distribution of taxes in Pakistan. Indirect taxes, according to in the fiscal year, according to the Economic Survey of Pakistan, 38% taxes in the collected in Pakistan were direct taxes, while 18% were through custom duty, and 38% was sales taxes, and 6% was excise duty. So this was something about the tax system of Pakistan. Now, at the end, let us discuss the problems of the tax system of Pakistan. We have limited tax base. In order to increase the tax revenue, the tax base should be increased. The second the second problem which the tax system of Pakistan faces is the agriculture sector. Agriculture sector is the largest sector of Pakistan, and it is considered a backbone of economy, but it is still exempted from proper taxes. Small shopkeepers like vendors, informal sector is exempted from the tax system. All these people, the vendors, the informal sector, the small shopkeepers, we have thousands of the shopkeepers in small towns in our cities, in the streets, but they are not taxed. They earn too much money, but they are not taxed. Similarly, vendors and the informal sector is not taxed properly, so they can contribute enough to the tax revenue if a proper program is set for them. Corruption is another form of problem of the Pakistan tax system, because the officials do not work fairly to collect the taxes. Similarly, the people submit false statements, and they show their firms, their organizations in loss instead of earning, and they make corruption. So there is different type of corruption which reduce the tax revenue. The process of exemptions and relief is also a problem which is restricting the tax revenue of Pakistan. Most of population of Pakistan is poor, so they are paying tax just through in form of indirect taxes, and they are not in a position to pay direct taxes, so the tax revenue is low. Similarly, the tax system is very complicated. The recently taxpayer pro forma is very complicated one, and an ordinary person is not able to complete that pro forma. the procedure is very complicated, so it should be made simplified so that each a common man, even a common man, be able to follow the procedure. The system is inefficient, and the role of bureaucracy is also negative role of bureaucracy, also making the Pakistan tax system inefficient. You can read the Economic Survey of Pakistan 2019-20 for this purpose, the Federal Budget 2020-21, the Global 2016, and Hammond 2011. The material used in this lecture has been taken from these sources. So it is suggested to give reading to these sources. Thank you very much.